Calgary's real estate market is entering its typical winter slowdown until the new year, but the underlying trends point to stability and potential price recovery ahead. But it's early days. So the stats for October 2025 are out, and after months of building inventory, Calgary's real estate market showed early signs of improving in October. The market is taking a breather and inventory levels eased compared to September, thanks to a combination of fewer new listings and a modest pickup in sales activity. With about 6,500 units in inventory and about 1,900 sales, the months of supply dipped back to 3.5 months, down from 4 in September. This is the direction we want to see them go. This shift suggests that while supply has increased in some segments, the overall market remains stable and well balanced, particularly for detached and semi-detached homes. So what are the sales and marketing dynamics at play here? Well, so far this year, Calgary has recorded about 20,000 sales, down 16% from last year, but still consistent with the long-term averages, especially when you look back at 2021 and 2022. The slowdown has been concentrated in condos and townhomes, where there's been a huge increase in supply, which has shifted the balance toward the buyers. So improved rental supply and dropping rents have eased ownership demand, and this has really reduced pressure on the entry-level ownership market. This is because dropping rents are keeping people renting. For many people, many segments, it's actually cheaper to rent than it is to buy now. So why would they go buy a property? These conditions have led to record high October inventories for condos and townhomes, and this is a key factor weighing on the prices in those categories. As of October, the total benchmark price across all residential property types in Calgary was $568,000. This was down 1% month over month and about 4% year over year. So we're not seeing a crash by any means. It's been a slow decrease in prices as the market is absorbing the new supply. But what does this mean for investors? Well, the last month was great news because inventory for condos and townhomes has kept falling. Now, this is consistent with seasonal trends that we've seen in prior years. It always does decrease in towards November and December at the end of the year. But the important thing to watch is that months of supply for detached and condos started to decline. And this is the catalyst for future price growth. The market needs to churn through this available inventory before prices can rise again. We need that scarcity and we need that reduction in supply. Townhome months of supply was actually up slightly, so hopefully this is just lagging and it starts to come down when we see the stats in November. Now, in Calgary, November and December are typically very slow months, and I don't expect anything different this year. All of the trends are following previous trend lines. Sales and new listing activity, it's going to continue to drop. And so are prices, but don't freak out. They're not going to crash 10%, 20%. We are talking a very marginal decrease in prices here. Now, the statistic that I'm worried about is days on market. This has still been stubbornly high, around 2 months for condos and for townhomes. Now, this might be a reflection of sellers trying to get that prices from the beginning of the year and continually needing to reduce their prices. They're just sitting on the market. If you're listing your property for sale today, you need to be aggressive on the price, especially in the slower market, to get it sold so that you don't trail down the market month over month over month. And with rent stabilizing and inventory leveling off, patient investors should just sit tight and ride out the market. That's what I'm doing in Calgary with my units there. But for those investors that need to sell or want to deploy their capital elsewhere, now is the time to sell. Don't wait. Otherwise, you'll want to wait into next year and into the spring market when the market traditionally picks up. Now let's take a look at the individual market segments and how they performed in October of 2025. So let's start off by taking a look at the condo segment. Now, in October of 2025, the sales ticked up slightly from September, but really they were same at about 412. It's falling within seasonal averages, but quite a bit below 2024 and 2023. New listings have also started to come down a little bit, typical with the seasonality that we've seen in other years. New listings have been quite a bit higher than some of the previous years, though. And the sales to new listings ratio, we're sitting at about 52%, a slight increase from last year, but well below the 60 to 80% that we'd seen in some of the previous years. And since only about half of the new listings are selling, inventory has continued to grow. Now, thankfully, we have seen it start to come down. It was nearly 2,000 in September, now just below 1,900. And through the rest of the year, I expect to see it continue to decline like we've seen every other year. Now, the fact that we really need to watch is months of supply. This is the big indicator of what prices are going to do. It had a maximum of 5% back in September, and it ticked down to 4.6%. This is absolutely what I wanted to see continue to do throughout the rest of the year. I want it to go down and down and down. And days on market has been stubbornly high. We're sitting at about 52 days, which is a little bit less than 2 months. Now, I think this is because, like I mentioned before, many sellers are listing too high. They're trying to get prices from 2024 or early 2025. They're sitting on the market and continually having to cut their prices. This is artificially keeping the days on market. Whenever I'm listing a property, we're always targeting to prices to sell within 30 days. We want to maximize your value, but we want to minimize the amount of time that you're on the market. And what has the price done? Well, this is the benchmark price over the last 4 years. Now, it has come down a little bit. Condos are down about 6% year over year, about 1% month over month. You're not seeing it crashing, but it is steadily declining. I do expect this to continue to decline throughout the rest of 2025. And then in January, February, and March, for it to really level off. We're still significantly higher than we were back in 2021 and even early 2022. The average benchmark price was about $250,000. Now it's about $315,000, kind of in that mark. So we are significantly higher over the last 4 years. So now let's take a look at the townhome market. Sales did continue to decrease throughout October. And new listings, you did see them come down as well, but you're seeing, nearly record levels of townhomes being listed. Sales to new listings ratio, you're at the exact same rate as condos, about 52%. And this has caused the inventory to continue to build here as well. We are well above the previous years. And what's a little bit scary on the townhome side, something that we saw for condos, months of supply is continuing to build. 3.8 is a balanced market. Anywhere between 2 and 4 is a balanced market. And we're starting to push that upper boundary. I want to see that start to come down in November and December. And then taking a look at the months of supply, it has continued to build month over month. And this is the scary statistic. I want it to start decreasing in November and December. But at 3.8, you're sitting in a balanced market because anything between 2 and 4 is considered a balanced market. Anything over 4, you're trending into a buyer's market. And days on market, this is now stubbornly high, sitting at about 50 days on market or nearly 2 months. And you've seen it continue to increase every single month. Very similar to condos, I think people are just pricing their units too high and they're simply sitting on the market, which is causing this. And then taking a look at the benchmark price. Well, similar to condos, it has come down a little bit through 2024 and 2025, and I expect that to continue throughout the rest of the year. But you can see that we are well above the benchmark price, which is probably $280,000 back at the beginning of 2021. We're sitting well over $400,000. You have seen massive gains in the last 4 years. And now turning finally to the detached house market. Sales, you were just about over 1,000 sales. You can see that detached houses are making up the majority of the supply in the Calgary market. And these sales are trending very close to a lot of the previous year. So the detached market is hanging on a lot better than the townhome and condo market. New listings, it is higher than the last 5 years, sitting at about nearly 1,600 units. And sales to new listings, actually quite high at about 64% compared to the other markets. Inventory has continued to build quite significantly, just under 3,000 units, and you're well above the inventory levels that we've seen for the previous years. This will continue to decrease into the end of the year. Months of supply, even though that inventory is building, we dropped quite significantly from 3.7 down to 2.9 months of supply. This is a very welcome sign, and we'll see what 2026 brings and if that trend continues. Days on market sitting at 37, this is very healthy. This is just over a month. And I think a lot of people are pricing their units. A lot of interest are still very attractive for the detached market. And what do we see for pricing? Well, unlike the other townhome and condo segments that have been decreasing throughout 2024 and 2025, you saw it really peak in 2024 and then touch that again in 2025. And you've seen it come off of those highs a little bit. But where did we start back in January of 2021? Just over 500,000. Nowadays, we're just under 750,000. That's a 50% gain in 4 years. Well, thank you so much for watching my video. If you liked it, please give it a thumbs up. I would really appreciate it. Subscribe to my channel. And if you need any help with buying, selling, or renting a property in Calgary, please give me a call. I would be more than happy to help. Bye for now.